When I look back on my years as a trader, I come to the conclusion that all of my errors stem from one of two failures, either not risking right or not sitting tight. Let's take a look at these two concepts and how they play a dominant factor in trading profitability. Ed Seykota once remarked, "There are old traders and there are bold traders, but there are very few old and bold traders." Most new traders focus on how much they can potentially gain from a trade. However, the seasoned trader knows that risk management is the foundation of long-term success. As Ed Seykota most brilliantly pointed out, trading recklessly may be fun, but it is an invitation for disaster. Cutting losses is by far the most important aspect of risking right. Holding just one Enron can completely devastate your account. "Oh, it will come back, it's just a little dip," is the rallying cry of a losing trader. Remember, if a stock falls by half, it has to double just to get you back to break even. When you hold on to a loser, you tie up your emotions and your capital just hoping for the stock to return to its prior levels. By taking a quick loss, you protect your account against a massive drawdown and open up opportunities to either initiate new positions or to circle back to the same stock at a more appropriate time. Remember, in trading, the truth is weak hands are the rich hands. But risk management is more than just cutting losses. Consider the following questions before you make a trade. At what price level will I cut my loss? How much will I lose if I get stopped out? When does this stock have earnings? What is my worst case scenario on a gap down? Does this current setup help me to manage my risk to reward ratio? To download a free Excel spreadsheet to help you plan out your trades, visit my website. Sit tight. Like most traders, I've suffered from an inability to sit tight. This was by far my biggest struggle and something that took me years to get under control. I've had times where I could just not step away and had to make a buy just because the market was open. Even if we were in a deep correction or an individual stock was not at a proper entry point, I just had to make a trade. This lack of discipline leads to a lower percentage of winning trades and thus a decreased expectancy. I know many traders suffer from this strange addiction. It's almost like they become action junkies who need to place a trade to add some excitement into their lives. This need for action, however, often comes with a heavy price. As losses start to pile up, a trader with this type of gambling addiction will soon find his capital and confidence wiped out. The other side of not being able to sit tight is not being able to let a winner run. There have been many a times where I fell victim to cutting a winner short only to watch it rally without me. There I would be on the sidelines with my 5% profit as the stock climbed higher and higher on a daily basis. This in turn would cause me to force another trade to compensate for the missed gains I would have had if I just had the patience to sit tight. Then, of course, because I had chased an extended stock or bought a laggard, this new purchase would come crashing down with me on board. Legendary trader Jesse Livermore famously stated, "It was never my thinking that made the big money for me. It always was my sitting." Got that? My sitting tight. Livermore surely had it right. Successful trading is all about waiting. Waiting for a proper entry point. Waiting for a proper selling point. Waiting for the position to play itself out. Good trading is really about patience and discipline and waiting, not the act of trading over and over. Most people just can't sit like this. They cannot wait for a proper setup. And even if they do, they can't step away and let a stock go through its normal reactions. Because they cannot sit tight, they end up cutting themselves to pieces through their constant need for action. We all go through it, and it's part of the process of becoming a successful trader. So what can we do to enhance our ability to sit tight? I found that monitoring every tick makes the waiting more and more difficult. While I do pull up charts multiple times a day, I also make sure to exercise, chat with friends, and do other things I enjoy rather than being glued to a monitor for 8 hours a day. I have alerts set to notify me should a major support or resistance area be touched. If you have an issue with overtrading, it's important to consider why you have the need for constant action. Maybe you can add some excitement to other areas of your life if you are bored, or you can study past trades in order to have the confidence to know when to buy and when to sell. In an effort to enhance my sitting ability, I often ask myself the following questions before I place a trade. What type of market is this? Is this a strong bull market? Or is it best to sit out until conditions improve? If William O'Neill saw this setup, would he buy it? Do my sell rules indicate I should sell here? Or am I getting emotional? Am I overemphasizing the last hour and disregarding the long-term trend? Do my trading rules give me the okay to buy this stock, or is FOMO involved? I've made a decision over the last few years to make the guiding principles around my trading to risk right and to sit tight. I do my analysis on the weekend when the market is closed so I can have a level head without getting my emotions involved. Monday to Friday becomes very simple and it's just a matter of executing my plan. Other than my weekend research, most of my week is spent waiting for the signal to buy or sell. Although that doesn't sound exciting, I'm more interested in profitability than excitement at this stage in my life. Risk right. Sit tight.